Hi everyone, hope you're all doing well. So today we're going to do an S4 Capital video. This has been requested quite a lot in the comment section recently, and if you guys ask, I will give. And a few of you guys asking me to do an update on what's kind of going on with S4 Capital, and here we go, we'll take a look. Now obviously S4 Capital is on the London Stock Exchange. It's now a 640 million market cap company. I can't believe I'm actually saying that's under $1 billion market cap. We'll get on to the reasons why I'm going, I can't believe it's under $1 billion market cap in a little bit in the video, but absolutely crazy. And at the moment, it just seems to be dropping and dropping every single day, every single week. It just seems to be dropping more and more. And when you actually zoom out a bit more on the share price, you can see here that since the stock actually came on the stock market in 2018, and by the way, this company was only founded in 2016. This is still a relatively very new company. And since it came on the stock market in 2018, we are talking about a company now that is lower than where it was in 2018. That's, when we start looking at the progress here and you go and realize, obviously there's factors to, place in like share dilution, for example, but you look at that and think, the time from where it was in 2018 and now it's lower than that, it's absolutely crazy. And then you look at the share price and, you look at how volatile this company is, and you can see here that from the, when it came on the stock market in 2018 and it rallied up to, 2020 before the TV situation, and it was a £2 stock. And then from there, the stock then dipped massively from that time frame during the whole CV times. Then we had a bit of a, big rally up. It was an £8 stock, and then we see it, absolutely crater back down to a £1 stock. Then it rallies up again. It goes up to a £2 stock, and then it goes back down again. And just look at the share price. You look, it's a very volatile share price, and you look here and go, when you look in the financials of the business, when you see a share price like this, you'd expect to see financials in the company like going up and down, up and down, up and down like crazy. You'd expect to see fundamental change rapidly up and down inside the business when you look at the share price, because this share price is moving crazy amounts, absolutely crazy amounts. And ultimately, I guess as well, like when we look at S4 Capital, why is there so many requests to talk about S4 Capital recently? And when you look to the start of the year, there wasn't really that many requests to talk about S4 Capital. So why was there a big request to talk about it now compared to where it was only a few months ago? And why was there a big talk about it in 2022 and there wasn't a talk about it in 2021? Well, the first thing is, there's always that factor of panic, that panic when the share price goes down. Fear is the biggest emotion in the stock market. Fear can make people do decisions in the stock market that they wouldn't do otherwise. And it can consume people and make them make bad decisions. You very easy to look at a share price when it's up and go, oh, everything's fine, I'm not really bothered about that. And then as soon as the stock goes down, it's like, whoa, that stock's down 50%. What's going on? Is this a bad stock? Do I need to panic? Is the financial case going bust? Or is there something going on behind the scenes that there's fraud in the numbers, or this is happening? The fear is so much of a bigger motion and greed. When a stock is up, everyone's like, oh yeah, whatever. When it rallied up, oh yeah, it's up 50, whatever it was. What did it rally up? 50, 60, 70, 80%. It's rallied up. Yeah, it's good stuff. When it's down, 30, 40%. Oh, whoa, what's going on here? And it just shows you, and the example of that would be something like SoFi. I talked about SoFi about a month ago. The stock goes up over 100%. It's had a little bit of a pullback on Friday, granted. But, how much is SoFi talked about? It's not really talked about. Something like AlphaWave, I talked about AlphaWave. I remember the negativity around AlphaWave when I talked about it. And then since that time frame, the stock is, rallied up crazy amounts. Since I mentioned the video, it's up over 40%. And is AlphaWave really talked about in that sort of, no, everyone's kind of gone, I remember when the share price was 90p, everyone was like, oh, it's a terrible company, it's frauding, everything like this. And as soon as the stock was gone up this much, everyone's like, well, could be all right, that, whatever, we won't talk, And it's like Darktrace. Darktrace has had so much controversy around it since the stock absolutely created. And then you've seen, since that time frame, since the short report came out, and it was like, oh yeah, terrible company, frauding numbers. And since that time frame, since the short report, the stock's up 62%, and it's like, oh yeah, it might be all right, but it don't matter now, And it shows you, when stocks are going up, everyone's like, oh yeah, it's fine, it's an okay stock, whatever, As soon as the stock absolutely starts creating, a short report comes out, whoa, what's going on with Darktrace? It's terrible, everything and the panic is there, and also the panic of investors and also the media. The media love selling panic as well, and it just shows you what can happen on share price. And right now everyone's looking at S4 Capital and like, wow, it's down at, £1.11p, what's going on, terrible company, something's going wrong with the company, or the financials deteriorating. And it shows you the effect that emotion has on share price. So that's the first point I wanted to make, but let's go back to the basics. Let's go back to the basics of S4 Capital. So 2018, the company was founded, or was established, founded in 2016, and then really started coming into its peak in 2018. It's a digital advertising and marketing technology company. So straight away, let's talk about, it's led by Martin Sorrell. So I think some of the concerns around him at the moment, I think obviously we got told a while ago that he obviously was going for some surgery, and that is actually when the share price started to dip. And eventually when the share price had dipped, a good 30-40%, it came out that Martin Sorrell actually went in for cancer treatment. So the feeling is that where we were told he was going for surgery, a lot of the other the markets already knew it was cancer treatment. And the worry is that, okay, if it's cancer treatment, could it be something very serious where he has to move away from the business? And I think that's what's causing quite a bit of pressure on the company at the moment. And the reason why Martin Sorrell is so key to the business is because when you look at his track history, Martin Sorrell obviously is the founder, chairman of S4 Capital, and he has done a fantastic job. But also when you look at his track history, he was the CEO of WPP for 33 years, and he brought that from being a 1 million shell company in 1985, very similar to what obviously S4 Capital was. And by the time he left in 2018, it had a market capitalization of over 16 billion. Revenues of over 15 billion as well. And you're looking at S4 Capital at the moment going, can he take that to that level? And the great thing as well compared to WPP is you look at their gross margins. I think their gross margins are something like 30-40% and more towards like traditional advertising. Something like S4 Capital is more now towards digital advertising. You look at S4 Capital's digital gross margins of, I think it's like 70-80%. You'd think that it has so much potential to potentially outgrow WWP, and also on the gross margins, on profitability basis. And that's why everyone's kind of excited about it. So you look at his track record and how he's done so well with WPP, and you're thinking, well, can he do exactly the same with S4 Capital? That's the key thing that we're kind of looking at. The next thing is obviously looking at a digital advertising and marketing company. What's kind of going on in the digital advertising space? Is the digital advertising space going to have some pull down in the financials? Is it going to have some sort of pull down in the share price? And when we look at the moment, global advertising itself is forecast to speed up after a slow start in 2023. So clearly, growth is slow in this space at the moment. It's a whole industry kind of thing. But in the long term, digital advertising will return and will grow at very good rates. And hopefully S4 Capital can grow faster than what the market average rates is going to be. But also when you look at other companies, are other companies that are in this space getting affected by this slowdown in advertising at the moment? Well, let's look at one of the biggest companies that relies on advertising. Google relies on it for its Google platforms, its YouTube platforms. And you look at them, they're growing out 2.6% year over year. This is historically very low for Google, that is normally a double-digit growth company. So even Google are having, their growth a quarter of what it normally is. So is it a company issue why there's potentially slowdown in the financials? Or is it an industry thing? And it's clearly an industry thing. S4 Capital are going for a weaker time at the moment. The industry is going for a weaker time. And also you look at like it's a Google and they're going for a weaker time. So we know that there's something like a short-term issue going on at the moment in this sort of space, and can they recover? And it should, will it recover in the longer term? And it looks like it. Now, obviously, the differences between S4 Capital and Google, like not comparing S4 Capital to Google, because Google's probably one of, if not the best company in the world, but Google did get punished on the share price for this period of time, but then it has recovered it and it's up 13%. You look at something like an S4 Capital, it just keeps going lower and lower, which is like, well, it doesn't, obviously Google is, everyone's going to be absolutely wanting a dip on Google and wanting to buy that dip in Google, but it's a bit of a disconnect kind of going on there. Now, the other thing is potentially, do you work in, is it something to do with AI? Is AI potentially saving Google share price and not saving S4 Capitals at the moment? Maybe that's some sort of pressure that's kind of going on in this space. I don't know if that's another pressure that's kind of pushing down at the moment, but it doesn't kind of make sense when you look at the two companies. Both are having financial pressure, trouble at the moment, and an industry weakness, but yet one stock is doing very well, and this is absolutely getting punished massively. We'll have a look at the recent accounts, and the last year accounts were actually, okay. we saw revenue growth of 55%, like for like was 24%. So this is obviously fantastic. 24% revenue growth is absolutely amazing. Now, unfortunately, because of a lot of acquisitions they made, and this is why it's key to focus on like for like, we can't really use profitability because they aren't currently profitable. And EBITDA is also a bit of a hard metric to use, but you can see here that they currently did 124, which if we did use operational EBITDA down to the market cap, obviously that would be something like a 4 5 times, which is obviously incredibly low. Obviously they did operating losses, you can see here. You can see here which was 249 of preliminary combination related expenses, being payments linked to continued employment and the associated expenses of amortization totaling 229 million versus 123 million. So there's a lot of the acquisition costs here that are going to be bringing it down at the moment. So it's a bit of a hard metric to use on profitability. But you take them out and you would think that they will start driving up profitability. And also this was a period of time where there was a high, they overhired a little bit as well. So you'd think that that will be something that they'll easily be able to drag to profitability in the long term. But I do want to just make note of this. If you actually look at their net revenue and how much actually comes from America compared to Europe and Asia, we're going to use that a little bit later on in the video. So I just want you to show them numbers just for context a little bit later on. But also on a free cash flow point of view, they've gone from 33 million up to 69, let's call it 69.8, let's call it 70 million. So they've gone to nearly 70 million in free cash flow. Same again, if we look at the market cap, we're talking about a company here that is nearly really 9 times free cash flow, which just came off 24% revenue growth. Which once again, you're thinking, it's quite hard to evaluate because it is unprofitable, but you look at them sort of numbers and it just looks, extremely cheap from that point of numbers. Now, I do have a little bit of a negative that has come out in the last kind of weeks, and I will point this out for you guys that I have noticed. So you can see here that they are estimating 8 to 12% like-for-like growth after reflecting the pro forma impact of the Whopper. Now, the problem is if you actually go on the AGM, they actually snuck in a little bit of an outlook cut. So if you actually look in the recent AGM that came out, you can see here that they actually said that they maintain a 2023 net revenue growth guidance of 8 to 12%, excluding the impact of the Whopper, and then including it's 6 to 10%. So they have brought the revenue outlook down slightly in the last few months, which I don't like how they did that. I wish there was a bit more transparent on that. But the thing is that, it's 6 to 10% growth is still not too bad considering the in the environment you look like Google, for example, there, that how much they've kind of contracted at the moment. They are going to have slower growth. Now, for me personally, I would have liked to see them come in this higher kind of 10, 12%, and even on the 10% side, that's where I'd be more happier for them to kind of come in, even in this environment, because I think I would like them to outgrow the industry as a whole, and that would give me more confidence that when the industry does come back with a lot of growth, they would then outperform the industry. That's what I'm really looking forward to seeing them do. So that's a key part for me, and they are always edged towards the second half of the year. So we won't see that if that does turn out to happen until the back end of the year. So that is something key that I am kind of waiting for at the moment. So personally for me, when it comes down to buying shares, I'm personally not buying shares at the moment because I have just seen them come out with this outlook cut. And I just want to be a bit conservative at the moment and see if they don't cut down anymore. And also I want to see them come at the higher end of this guidance towards the back end of the year, and that'll give me confidence to carry on buying. Also, the factor is that I actually have quite a big position already, and that's also something that does play in my mind when buying into S4 Capital. But clearly from a selling point of view, I can't sell this company because I look and think they've just come off a really mega 2022. I can understand why the financials are a little bit weaker this year. You only have to look at likes of Google, the industry as a whole. But then I look at the valuation, and the company is now putting in over 1 billion in revenue, and the company is valued at 640 million market cap. It's absolutely bonkers. And then you look at the free cash flow. It's trading down at like a 9 times free cash flow. Operational EBITDA, I think what did we say earlier? It's something like was it a 6? We said it's extremely low. And then you're thinking this is in a time period where it is a weaker environment, and this company should go back to probably them higher teen percentage growth when the advertising market rebounds. And you're thinking, well, if this company is going to rebound and that free cash flow is going to start going up more and more, the EBITDA starts going up more and more, the revenue goes up more and more, But if we start talking about a company then that starts focusing on profitability, with 80% gross margins, we could talk about a business that with 1 billion revenue. We could easily see them start pushing towards 50 million profit, 100 million profit. If you start working out a longer term DCF of this. Let's say you start getting a company that starts putting in 100 million in the next kind of not 10 years, next 5 years. You talk about a company down at 6 times earnings. 6 times earnings for this company that's going to be growing high teen percentage. It's absolutely bonkers how this company can be at these sort of levels. And you just think, if SFL Capital, when they get out of this tough patch of advertising, do carry on executing how they've done previously with good amounts of growth, start driving up free cash flow, get that profitability up. I just see I can't see why the company would not go to back up to a £5 market cap. I always thought SFL Capital would go up to a £5. Ultimately, the big challenge is, can they push it up to a £8, £9, £10? And that, for them to do that, they would have to execute obviously high teen percent growth. And that profitability would have to get up to 10, 15, 20% profit margins, which could happen because you look at WPP that Martin Terrell used to manage. He managed to get, I think it was 10% profit margins there, and he was working with 30% gross margins. You look at SFL Capital, he's got 70, 80% gross margins. He's got nearly double the gross margins. So you'd think that he would be able to get 15, 20% profit margins when the company does mature in more years' time. You would think that he would be able to do that. And then you're thinking at that point of view, obviously really attractive. And ultimately, the share price decline at the moment doesn't make sense to me. Even considering Martin Terrell's issues that he's had with his health, I think he'll still be here. You look at the issues with maybe the overhiring, that's resolved. I'm looking at the market industry issues. There's issues going on in the market at the moment that they're working, but I still can't justify the drop here. I don't know if there's something going on behind the scenes that the market has got ahead of what we've got. Something that maybe is happening behind the scenes that we're not aware of yet. That would be the only other explanation I can kind of get here, but it just doesn't make sense. And I also look at SFL Capital and how it should not fall below a billion market cap at the moment. SFL Capital should not fall below a billion market cap. And you look at what other companies are valued at, and you're just thinking, is it just getting brought down because it's on the London Stock Exchange? Like, if this was a company on the US side of it, the companies like this would be mega valued. The companies like SFL Capital that would be doing 60 million in free cash flow, that is a mega, marketing company. And, you'd be talking about a company that is trading 20, 30 times free cash flow. It just doesn't make sense. And I ultimately go to what Martin Terrell said last year. And he said that he was considering a New York listing of SFL Capital and potentially moving across there because it would get a better valuation. And I can only agree. If SFL Capital's down here for no other reasons, if there's not anything going on behind the scenes, it's crazy how low that this company should be or is right now. And without doubt, if it was on, we saw most of the revenue comes from America, and it would make sense that rather than being on this, UK a UK listing, and it seems to be just totally misvalued on this UK listing, and most of the revenue is coming from the US, it does make sense to probably look to move to the US because this valuation doesn't make sense. Most of the revenue is coming from the US now, and it just feels like they would probably get a lot better valuation from the US side of it. So my thing would be, if this share price is realistically this low for no reason, if I was Martin Terrell, I would 100% in the next 12 months be looking to get this off the London Stock Exchange, and I'd be looking for a New York stock listing, because it just seems like it's just getting brought down because of being a normal UK company. We know UK companies, they do tend to trade at a lower valuation than US companies, but most of its revenue is coming from the US. If it was to go to the US and it was to do the growth that it has and the potential for its profitability, its free cash flow, you would be getting so much of a better valuation. And that would be what I would, if Martin Terrell was to watch this video, I would say, ultimately it's sad that we get to this point of view for a lot of UK companies, but I'd say, just get it off here. Let's get onto the US, the New York Stock Exchange listing, and I can already see that would be a better valuation. It won't be doing what it's doing right now. But we'll see what happens. You know, we never know. You know, in a few months we might come back and we might say, oh, the reason why it was going down here because there was something going on in the background, and that might come more clear. But right now, I can't, you know, when I look at the share price and the share price has been going like this, I can't say that there's that been going on inside the company, because it has been doing well, and it has been doing well considering the environment they're in. So yeah, that's the video on S4 Capital. Hopefully that makes a few people happy and solves any, you know, questions you might have. You know, I don't want to do an S4 Capital video every kind of month. I've seen that before where like I end up talking about a stock, you know, like every month, and getting tied to that stock even though you have over 30 stocks. So I don't want to talk about the same stock too often, but I know a few of you guys did want to see this one, so hopefully it was helpful. And if you could smash that like button, that would be absolutely amazing. Then catch you in a bit.